Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
We're tracking rising bond yields, a wave of bank earnings, and a fresh push on NRI deposits. Let's start with the numbers. The 10-year government bond yield climbed to 6.77%, pressured by a weaker rupee near 96, and Brent crude pushing above $85 a barrel on renewed US-Iran tensions.
And that oil spike is the real story here, Vijendra. With retail inflation already at a 15-month high of 4.38% and the US Federal Reserve staying hawkish on rate hikes, Indian bonds are getting squeezed from both sides, costlier oil and costlier money.
Turning to earnings, Indian Overseas Bank had a standout quarter, profit up 49% to Rs 1,659 crore, with asset quality improving sharply. Meanwhile, banks are racing to pull in FCNR deposits before the Reserve Bank's September 30th deadline, though Punjab National Bank has raised barely a sixth of its $2.5 billion target so far.
Slow start, but not a surprising one. Global tax complications are holding things back in some regions. Analysts still expect momentum to build from the Middle East, Singapore, and Hong Kong as the deadline nears, even if final inflows land below the early $70 billion estimates.
In the bond market, Canara Bank made its scheduled interest payments on time, over 900 crore in total, keeping investor confidence intact. And corporate lending is booming, up 26% year-on-year at top private banks, outpacing retail loans as companies turn back to bank credit instead of pricier bond markets.
HDFC, Axis and Yes Bank all show the same pattern. Corporate books growing 2 to 5 times faster than retail. It's a clear sign that rising bond yields are pushing borrowers straight back to their banks. Zooming out, India's private credit market, currently $25 to $30 billion, is projected to hit $100 billion by 2050 as family offices and wealthy investors pour in. Meanwhile, the RBI took a cautious approach in its latest bond switch auction, accepting less than half its 30,000 crore target rather than lock in high borrowing costs.
That restraint says a lot. The RBI would rather manage cost efficiency than force through a full auction. It's the same discipline we're seeing across the debt market this week. The rupee had a rough day too, slipping to 96.41 against the dollar as the Sensex fell nearly 59 points, with foreign investors pulling over 1,000 crore out of equities. On the corporate borrowing side, Exim Bank is issuing 3-year dollar bonds worth $300 million, its second such issue this year, backed by the RBI's subsidized hedging facility.
That hedging facility is proving popular. TVS Motor, Power Finance Corporation, and several private banks have all leaned on similar tools recently to raise capital more cheaply despite the currency volatility.
Speaking of TVS Motor, they allotted 500 crore in debentures at a 7.3% coupon. Elsewhere, the Shapoorji Pallonji Group closed one of India's largest private credit deals, raising roughly 15,100 crore. And Manba Finance will hold its Q1 earnings call on July 28th.
The Shapoorji deal really stands out. Zero coupon bonds yielding almost 19% show just how much investor appetite there is for large, well-structured private credit transactions right now.
Reliance Industries posted a consolidated net profit of 23,196 crore, up 6% on strong oil-to-chemicals and retail performance. And Punjab National Bank's profit more than tripled to 5,253 crore as provisions dropped sharply.
Both results point the same way, improving asset quality across the board. PNB's gross NPAs fell to 2.78%, and Reliance's digital and retail arms are picking up the slack as energy margins soften.
So were limited plans to raise up to 1,000 crore through debentures to strengthen its capital structure. Kotak Mahindra Bank's profit rose 23% to 5,480 crore, and Grasim Industries has plowed nearly 74,000 crore into capex over 5 years, expanding well beyond its textile roots.
Grasim's diversification into cement, paints, and financial services is really paying off. Ultratech is now the largest cement player outside China, and Birla Opus has already climbed to third place in decorative paints.
Axis Bank's profit climbed 23% to 7,114 crore, and UPI just crossed a massive milestone, 55 crore users and over 314 lakh crore rupees in transactions this fiscal year.
That scale confirms what we already suspected. UPI isn't just dominant in India anymore. It's actively expanding abroad, with person-to-merchant payments now live in 9 countries.
The RBI's special overseas deposit push has already raised $17.4 billion, easing rupee liquidity. Meanwhile, SEBI fined CDSL 1 crore rupees over a 2022 cybersecurity lapse, and NBFC credit has surged to 34.5 trillion rupees, up sharply from just 9.7 trillion in 2018.
That NBFC growth reflects real financial inclusion. GST adoption and digital payments have made it easier for banks to lend confidently to well-capitalized NBFCs serving smaller businesses.
Aditya Birla Capital wants to double its assets under management to over 3 lakh crore by 2029. Karur Vysya Bank's profit jumped 45%. And Jana Small Finance Bank had to revise its numbers after the RBI found its bad loan reporting understated by Rs 169 crore.
That Jana revision is the one to watch. Underreported NPAs mean the bank's profit for that year was cut down significantly once RBI audits caught the gap.
Banks have now raised $20.7 billion under the FCNR scheme in just 6 weeks. Punjab and Sindh Bank is targeting 4 lakh crore in total business. Unifin's Capital and EPL Limited both completed clean, on-schedule debt transactions. And the RBI approved Arion Group's 936 crore acquisition of the troubled Aviom India Housing Finance.
The Arion deal is significant. It clears the last regulatory hurdle before the case moves to the tribunal, and Arion's recovery offer for lenders was chosen over a rival bid mainly because it offered more execution certainty.
A quick roundup of the rest. The rupee weakened again on surging oil prices. Samanta India Organics raised 25 crore to support smallholder farmers. The 10-year bond yield touched 6.82%. Gift City is pushing to become a global commodity trading hub. Cube Highways Trust turned profitable. ICICI Bank is issuing dollar bonds via Gift City. Moneybox Finance raised 50 crore. Gold prices dropped 2.9% after last year's huge rally. Fed Bank and Mahindra Financial both posted strong quarters. ESAP Small Finance Bank called its AGM for August 14th. Banks reported over 1,42,000 crore in fraud losses over 5 years with weak recovery. TVS Motor posted its best ever quarterly profit. And leveraged FCNR deposits are drawing NRI money despite steep penalty risks.
A lot to digest there, but the common thread is clear. Indian markets are navigating high oil prices and a stronger dollar, while still finding pockets of strong growth in banking, autos, and digital payments. Investors chasing those leveraged FCNR returns especially should weigh the early withdrawal penalties carefully before jumping in.
That's all for today's episode of the DebtCircle podcast. Thanks for tuning in, and we'll catch you next time with more from India's debt and financial markets.